Good morning, traders. Steve Ganz here, and welcome to the weekend update for April 14th, 2024. So first, let's go through the open positions, and then we'll take a look at the market itself and see what happened last week and what we might expect going forward here this next week. So looking through our positions, this one is close to hitting our order to thin, and the thinning order is going to take out a large portion of this butterfly and reduce our risk on both sides, give us a little bit better bubble in the center to decay under. This trade is up nicely. There was a lot of adjustments early on in this trade. It's good that we're able to, at least at this point, look like we should get a moderate amount out of that. So I'm going to work to get this thing thinned out, possibly even closed here this week. So again, that's one. This one, if we get our rebound in SPY, this could actually close out nicely. But it has been adjusted a lot as well as we've gone through this trade. So my goal was to just get something out of it. Right now, the risk has been greatly reduced from when this trade started. So there is about $230 in risk in this trade to either side. And right now, I'm prepared to let this thing set through this week. Normally, I do not like to take trades close to expiration, with the caveat that unless I've thinned them way out to where the risk is fairly minimal at that point, like this one, the reward to risk ratio is good, and I do think that we might get a little bit of a rebound. I'll take a look at why here in a minute. So I'm thinking that I will leave this one closer to expiration than what I normally like to do. But again, that's because the risk is not much in this trade. And if I'm able to thin out one of these butterflies, there is an open trade in this, or an open order, that would reduce my risk even further. So this one I'm just going to let set at this point and see what happens, see if we might get a little bit of a rebound in the market. This one, great position. You'll see that it is down a little bit. But I like the fact that I was able to put this trade on in a little bit higher volatility environment. Now, the volatility has gone up quite a bit since I put this on, and that's why it's looking just a little bit pressured, and we're still under the 10. This is positive delta, but it's mildly positive delta. So what's going to happen in this one, if our market does continue down, I'll end up adjusting this or potentially adding to it. When I entered this trade, I said that I may add to this trade if the market sells off, which is why I entered it in a size that allows me to add some additional risk into this trade if I deemed it of value to do. So I'll be looking at that during this week. Again, if the market continues down, I'll add something to this or potentially just pick up this tent and roll it back, because we are early in the trade. All of these different types of adjustments are things that I get into in the deep dive butterfly class, where I go heavily into downside adjustments, upside adjustments, etc. So those of you wanting a sneak peek or wanting to understand all those ins and outs of those adjustments, if you have not taken that class, I urge you to consider taking a look at it, because it will give you the playbook before I make some of the plays here on these trades, and it will greatly shorten your learning curve. Then we have the Apple trade. Apple's finally starting to show some life here, and I will probably start to thin out some of these call spreads, reducing the upside risk, because as from the time I put this on, I am a little more of an Apple bull, especially going into this upcoming conference they're going to be having in June, which is expected to have some pretty big announcements from an AI standpoint. Again, Apple usually remains pretty tight-lipped about this sort of stuff, but Apple has been talking about this in the media. It's a little different that Apple talks about things before they come out, but they're tooting their own horn even on this stuff. And they did buy, I believe it was 35 different AI companies over the past couple years. We'll see what happens, but I do think that Apple is poised to have more of an upside move, or at least stabilize in this 175 to 185 range, and as such, I will probably be looking to thin some of these call spreads out and reduce that upside risk here this week if it does continue to stabilize or move a little higher. This trade also been in this trade a little bit longer, so it has decayed. Kind of the same game plan as up here, although this one, I'm far enough into this one that I probably would not add to this trade at this point, but I may very well adjust it in one of the different ways previously mentioned. Possibly a rollback of the entire tent, possibly lowering this wing, reducing some of the positive delta, but it only has 1.7 in delta. So again, because of what's already been done in this trade, it's been positioned well to handle this gyration that we're seeing in the market. And I should also note that all of these trades, we'll look at volatility here in a moment. All of these trades are showing a little bit of depressed P&L, even though they're under the tent, because volatility has picked up. And that does ding a butterfly a little bit. So even though you may be perfectly positioned in your tent, if volatility picks up from the time that you put that butterfly on, it can in fact start showing some negative P&L. That's just one of their characteristics. But that's also why, as we get into in the deep dive butterfly class, that's why those types of environments are the perfect environments for putting on a new butterfly when that volatility spikes up. So that's one of the reasons I want to look at maybe getting this one closed out too. If we get higher volatility, I want to be able to redeploy capital into a new butterfly. And then we get into this particular trade, which is the True Social trade. It started as DWAC, then it evolved into DJT as the symbol. And one of the things you're seeing here, it is showing a loss. But again, remember, when I got into this trade, I had very little risk in the butterfly that was put on. And I had something like 5 cents in risk, or $5 per butterfly. But I did put on a large load. I did put on, I think it was 30 butterflies. So with 30 butterflies times 4 legs per butterfly, I've got 120 legs per fly. So commissions on that, because I have my option trader's assistant here set to use $1 in commissions. Now, I don't pay that much, but I'm using worst case scenario for somebody that might be newer coming in. And all of the commissions that would have come into play on this certainly would be dinging this trade. If I just let everything go to expiration, I'd only have the $120 of the entry of the trade. But in this case, because I got multiple assignments, and then I had to go and cover my short stock, and then I had to go and sell the opposing calls on that, the long calls, I think that commissions have just killed this particular trade. And again, I don't pay nearly that much in commissions, so I won't be at that sort of number. There's also something that took place in assignment here that Charles is working on, where it's not calculating that assignment process exactly correctly. I think he has resolved that now going forward, but this older trade is not going to reflect that. So just know here right now, because our butterfly had been centered around this 41 range, this trade is going to be at a small loss, but it would not be anywhere near the loss that's shown here. It would probably be in the neighborhood of around a $120 loss, somewhere in that general range. But when we got the reward to risk ratio that I got on this trade when I entered it, the fact that I was able to sell a butterfly with $1 wide wings for 95 cents, only having a nickel in risk on each one of those butterflies, plus, of course, commissions, I'll take that trade all day, every day. So again, this one, it may still work out. We'll see. I'm just going to let this go to expiration at this point. But just know that the numbers in here are not quite right. It would still be at a loss, but probably not at this level. NVIDIA. So now NVIDIA had sold off quite a bit, and I was a little concerned about NVIDIA breaking down further. So I did roll my long put that I had in NVIDIA, which is what is holding up the T0 line. I did roll that closer, and that was expensive to roll that closer because I did that on a down day. Had I not done that and I let NVIDIA rebound here a little bit, this trade would probably be profitable a little bit, but my T0 line would be sagging quite a bit more here, leaving me open to more risk. So I basically paid for additional insurance by moving that long put closer. And I still like this setup. I like this tent. Let this thing decay into here. I do have a little upside risk now that I would have preferred not to have. But we'll see, because right now I'm not, as we'll look in a moment, I'm not convinced our market's just going to rip up from here. I'm envisioning some chopping sideways, possibly even a little bit more sell-off. So that's the current positions that are open right now. Again, my intent is going to be to greatly thin this one, potentially close this one. If we get a little bit of a market pop-up, I would like to get this one closed during the week this week. This one is a non-issue, not going to do anything with it, just going to let it set. And again, some of these others, these butterflies here, if our market stays where it's at and or moves up a little bit, those are going to do just perfectly fine. If we sell off a little bit, I will probably need to either add to this one a little bit because we're early in the trade and maybe adjust this one. But we'll look at that here as the market progresses going forward this week. So stay tuned on that. So now let's take a look at our market action itself. So in SPX, you will recall last week's weekend update, I had said something about I'm envisioning that we could get a pullback down here to this 5,100 range. My expectation right now is probably to have just some chopping back and forth in this general area, this 5,250 down to around 5,100. So we could break from that a little bit, but that's the general expectation that I'm having right now. Again, we'll see what Monday brings. We're also going into the start of earnings, and how some of these first earnings come in is certainly going to have an impact on what our market does. Now we can see here that volatility, this blue line, is picking up as well. We'll look at the VIX in just a second. But volatility is picking up. We're down here at a lower, what I would call a little bit of a support area. There's another major support area, possibly even a little more pronounced down here around the 50-30 range. But right now I want to see if we hold here at around 5,100. So that's what the SPX is looking. Let's look at SPY just because we can see some volume when we do SPY. And SPY, we're seeing that the volume, the down days, the volume is picking up a little bit. Compared to the up days, the buying isn't as pronounced on the up days. The selling is more pronounced on the down days. So that is a little bit of an indication of profit taking. People that they've held positions, whether it's in SPY or whether it's in the components that make up the SPY, they've held positions through a pretty strong rally. You may have also heard the adage about our market, sell in May and go away. So May can tend to be a volatile month, and there's sell-offs that happen during the month of May because a lot of people have locked in some pretty good gains in that first quarter, and they just want to shut down and ignore the market then for a little while. So you will tend to get many times a little bit of a downdraft or a sell-off going into May, and this could be what's happening here right now. So again, the down volume is higher than the green bars or the up volume, which is a little bit of a bearish indicator. So we'll keep an eye on that over the next few days here and see how that develops throughout the week as earnings start to get reported. And then we'll take a look at the VIX, and volatility really spiked here on Friday, all the way up here to 19. That's a big move in volatility in a day. But then by the end of the day, that had subsided quite a bit. So even though you can see this is the futures market here, even though our futures market sold off throughout the day, and then it did bounce just a touch here at the end, we still ended up down 1.5% on the day, but yet volatility subsided late in the day. So that's a little bit of a positive sign that the the flushing, if you will, or the sell-off, the weak hands selling off their positions, might be diminished later in that day, which would bode well for a stabilization or possibly a little bit of a bounce come Monday. So we'll have to keep an eye on this and see what happens again also on the VIX. We'll see if the VIX gets back up here to an elevated level on Monday, or if the VIX kind of stabilizes and comes back down a little bit. The VIX tends to be mean reverting, meaning that it'll have these big spikes, but then after it has these big spikes, more often than not, it will pull back down and get back into this 13 to 15 range and then stay in there unless you get some really traumatic things. This is not COVID. This was just a big sell-off, but COVID had similar spikes in the market that sustained for a long period of time. But generally, the fear in the market subsides fairly quickly as people get used to whatever the new reality is. The new reality could be a lower market. The new reality could be that we have to live with something new and different in our lives, like COVID and whatever. But as soon as people's minds start adapting to that new reality, whatever it happens to be, the fear generally subsides a little bit. So that's where we're at with VIX. Let's just take a look at RUT as well. And in the RUT, we're just seeing some chopping back and forth in this same general range. Now, I had these two larger yellow lines here showing what I expected the range on RUT to be. This red line here is approximately the middle of that range. And this, if we bounce off the middle of this range, I could potentially tighten this whole range up to be between this 2,000 and 2,100 area. If we get back up to this 2,100 area and we start to stall out a little bit, I think a case could be made for a new range going forward that's just going to be a tighter range, that 2,000 to 2,100. But again, we'll have to see with earnings coming out this week how this plays out. Is there going to be a crackdown through this? If so, I think we're looking back down here at the 1,900, and then these two yellow bars, these two big range bars that I've had in place for months, are probably still going to be in play. So that would be my expectations on RUT. So that's it, everyone, for the weekend update here for 4/14/24. Thanks so much for checking in, and happy trading. We'll see you all in the community this week. Take care.